We got the retail report. I think CPI is on Friday. Pretty sure we get CPI. Yeah, Dino, I'm kind of just going through it here. So we don't know, right? We're not in a full rally mode. We're no longer correcting. So what do you do? Well, the smart thing to do is to short term your trades. If you feel like you break the range to the upside, then you short term with calls. If I would say after tomorrow, if we break through 698, 699, 700, if the data that we get over the next few days in CPI indicates that we are not experiencing inflation and the markets are going to rally, then you begin with some short-term longs. Short-term. Until you've proven the rally with higher highs and higher lows and all of the economic metrics that need to be in place, right? So you stick with it short term, initially. Yeah, I don't know. CPI, here it is. Short term. Once you've determined that you're in rally mode, then you can go longer term. You can go out to monthlies, like March 20th, no further than that. You can go there either with calls or with puts once it's determined. So you start with short term because you're just going to take chunks out of the market. You're going to take steps, right? Price is going like this, like this. You're not going to say, I think price is going to go all the way down to 350 and price is at 400 here. You don't do that. What do? Well, you do the 395, 390, for next week and see if you can get that. Boom. Then you go 385, 380 and see if you can get that. Boom. You break a certain level, then you can go, I'm going to go 360, 350 for March because I think this has got, we broke through and now you're in full-blown sell-off. You take them in chunks, short term, until you're either in a correction or in a rally, and that's when you go long term. Now, once you are in long term, then you can short term your hedges. So once I've got a lot of 320s on, let's just say long, that's when I'll throw a put on for Friday, a put trade or something, just in case we get a reversal, whatever, and I'll be able to make my money, protect my position. I could take that money and if I want and put it back into the long term, that's called averaging down. Or if it looks like this is falling apart, then I'll take the money and I'll start moving in the other direction. Okay? So where are we? So let's take a look. I guess since I have the cues up, this is boom, 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 boom. Yeah, this is not a good pattern, ladies and gentlemen. Now, I know there's a lot of guys say, there's a reverse head and shoulders here, and here, and there's a inverse blah, blah, blah here, and there's a flying wedge and a whatever. Don't talk to me about that stupid shit. Let's just keep it simple. This is the 50-period moving average right here. And QQQ is trading below it. And the main reason it's trading below it is because tech has been falling apart, right? Apple, Microsoft, Netflix, Meta, software, just really falling apart. Getting a bit of a bounce now, but until the data comes out this week, and until you get back over this daily 50, look at it. Look how it just sits here and taunts, right? You got to get firmly above it. There ain't no rally unless you are above the 50. Dare I say, I think you got to be higher than that. Because look at this. What does it make sense to get above the 50 and go, woohoo, let's trade long, to just run into this, gap fill, and then reject? Look at all of this here. Gap fill. There's a lot of overhead stuff here on the Qs. So that's troubling. Not running in, not going into the long-term long at the moment, am I? Absolutely, I am not. If we look at what happened, and I'll come back to this in a second, to the software sector, The software sector, if I just look at IGV, it's an ETF. Yeah, so you can see what's been happening with software. This is like NOW, which I own. The software companies sort of came out about AI and their overspending. So the AI related software companies took a dump. And so not very good. However, they got some news today and some other software companies that are not necessarily AI based getting a bit of a jump and all that. So software is coming back. I decided rather than to go with IGV for my short-term long, because I have some shorts, I decided to pick Microsoft related hardware and software, but really related to the software industry. And look at the action that I got. Bang. That was awesome, right? So we have a credit spread sitting right here for Friday. I'm going to let it sit for a while. If we breach this level, if we breach 400, if we come anywhere close to 400, I'll close out the credit spread. I have a few puts that I shorted. I shorted the 400 puts, and I got good money for it. I got $425. So the idea was, if price stayed above 400, I keep the 425. If we drop below it, then I'll get the stock. I'll own Microsoft at 400, plus I'll have $425. So that means I basically own the stock at 395 and change. Who would not want to own Microsoft at 395? Me, right? So that was a good trade. But as far as the short-term long, Michael, I don't know if you did. Did you short puts? I don't know if you really ever do that kind of trade. Or Bud, did you guys short puts with me in Legacy? You remember my alert from like January 29th, I think it was, in Legacy, where I said I was going to short the 400s. Oh, you did? Oh, cool. All right, so get to keep that money. You could buy back those puts now and just keep the rest if you wanted to. So this right here, this little software bounce combined with NVIDIA getting some news that they could sell some shit into China. So NVIDIA, between software bounce and NVIDIA bounce, and then Bitcoin coming off of 60. I told you it was going to go down to 60, right? We've been trading that. Now we're bouncing off of 60. So you get a little bit of a bounce in Bitcoin, get a little bit of a bounce in NVIDIA, and the software industry goes. Then the dollar weakens ever so slightly. You get a retail sales report that shows a weakening consumer. That's going to send yields lower. When yields drop lower, that gives a bump to the Russell leading indicator. So the IWM comes up a little bit. You also find that high dividend stocks are going to do a little better. So you've got investors that will dump their bonds because this is not as good as getting a dividend. So the dividend stocks move higher. That's going to help the SPY. So that's all kind of connected together.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.